Thank you so much for joining in. We will be starting in less than a minute. Hello members, I am Kavita Agrawal and welcome again to our Let's Get Technical series. Today is Wednesday and as promised, I'm live at 2:30 p.m. to take you through something related to stock market analysis using technical analysis. I will be sharing my charts shortly, but few pieces of information for you first. This is going to be this week's last live session. Since next 4 days, I am a little occupied in personal endeavors. As a result of that, I will also be taking care of the market outlook in today's live session itself. Today, we are discussing about how to set targets and stop loss. I will share the screen and based on the stocks which you ask stock queries on, I will help you identify stop loss and target. I will discuss the methodologies which I'm using, the drawing tools I'm using. I will talk about stock personalities, various levels that you have to look out for, and cyclicality in stocks. I'll try to cover as much as possible within 1 hour. Yes, today's session is going to be an hour long. Like I said, I'm also compensating for the Friday session, which I will not be taking, unfortunately. And at the end of the session, I will go over the levels of Nifty and Bank Nifty. So without much delay, let's get started with the session. All right, so here I have the chart of Asian Paint, for instance. Now, Asian Paint is a stock in which I had initiated a long call on the 17th of April at 2824. Right, and I had set a target and a stop loss for this very position. Let's take a look at firstly, why did I initiate the long call, and then I will tell you how did I go about setting the stop loss and the target. If you can see on the chart already, I set the target for this particular position first at 3200 and the second target was set at around 3530. So now I will tell you why I set those targets. And see, this session, I'll not give you any false hopes. This session is not going to be enough to make you capable of setting your own targets and stop loss, right? Because it's not so simple. However, with the research analysts that you work with, you will be in a better position to understand whatever they're trying to relate to you. Or if you're someone who aspires to be a full-time trader in the market, then you will know what are the areas that you have to look into to become better. Now, the techniques of setting stop loss and target that I'm going to be sharing with you are things which I have honestly not studied in any book. It's basically a result of culmination of a lot of different practices and different pieces of knowledge put together from lots of different material, different authors, different YouTube videos. So everybody in the stock market has to find their own style of working, and based on my style of working, which is in swing trading, cash segment, select number of stocks, like around 250 stocks at most that I follow actively. This is how I go about setting stop loss and target. Now, before I give you a lot of details about how I go about setting stop loss target, one thing that I want to tell you is that different stocks have different personalities. What do I mean by that? For instance, take a look at this chart of Asian Paints on the 75-minute time frame. Now, if you're wondering why the 75-minute time frame, the answer is very simple. So this is a calculator, right? Now, every trading day has 375 minutes, excluding the pre-market and the post-market session. Now, the pre-market and the post-market session, I'm not considering that. You have the wrong impression about the market activity, which is not fair. So that is why instead of using 60 minutes, I prefer to use a period of 75 minutes. What this basically does is it gives me 5 complete candles instead of 6.25, like top 0.25 being incomplete candles. So that is the ideology behind using 75-minute time frame. Now, the charts that you're seeing are obviously TradingView charts, but then again, you cannot use this 75-minute time frame. You cannot view the 75-minute time frame on the free version. You will need a premium version for this. So now let's talk about stock personalities. What do I mean by that? See, some stocks can be slow movers, some stocks can be fast movers. Some stocks are great for momentum trading, whereas some stocks are great at giving one-sided directional moves. Now, if we talk about Asian Paints, let's take a look at the way it is moved. Let's take a look at the steepest wave that we can see on the charts. The wave right in front of us. All right, just hold on. I think there's a bit of a technical issue. So yeah, there is some problem with the sound. All right, so I'm hoping the ET live stream members are able to hear my voice consistently without much breakout. If no, then please indicate that so that I can, maybe try to help out my connection issues. Okay, so I'm in the comments. What I can see is a lot of people are asking queries with respect to a lot of options and futures. So I want to tell all the members who are attending that I am not a futures options expert, and in these live sessions I definitely avoid giving any advice on them because, like I said, I'm not the best person to ask these advices on. Options and futures behave in a very, very different manner from cash segment. Also, the analysis changes because your horizon changes, so not the right forum to ask those questions. Okay, thank you so much, Kanakraj, for the confirmation. I'll continue with the session now. So Asian Paints, like I was saying, the personality of Asian Paints. If we take a measurement of the steepest up move that we can see on the chart, we see it has given a move of 39% in a period of 100 days approximately. This is actually quite significant for this time frame on the 75-minute chart of Asian Paints, and this kind of tells us that Asian Paints is a slow mover. Why is that? Let's take a comparison to another stock which I consider to be a fast mover and see what that shows us. When you look at the charts without much measurement, it doesn't really tells you much, but here on the chart of HCC, for instance, let's take a measure. So here you can see in a period of just 36 days it's moved up 60%. Let's take a look at another upside here. If we take a measure of this, it's moved around 100% in again 40 days. So HCC is what we call a very fast mover. Now the problem with working with fast movers is that they go up fast, but they also go down pretty fast. So you have to have a mix of fast movers, slow movers, cyclical movers, trending movers in your portfolio. Let me give you a few examples of the other types. Alright, so let's take a look at the chart of Abbott India. Abbott India is a great stock for swing trading, and I will show you why in just a minute. So you can see that Abbott India, it moves up. It's a predominantly an upward trending stock, as you can see on the weekly time frame, but it also gives very good momentums, which basically means that it'll go up say 30% in around 150 days, but then it will also come down around 15-16%, and this is how it constantly moves. It goes up around 30%, comes back down around 10-15%. So that's why it makes a really good candidate for swing trading. If you also look at the past, the style of movement has not really changed a lot, but of course the degree of movement, that is the 30 and the 15 minutes that I just said, changes from time to time, and that is what actually takes the stock forward on a larger time frame. Let's take another example here. Let's take a look at the chart of Alok Industry. Now, why am I showing you the chart of Alok Industry is because Alok Industry is what I call a turnaround stock. Why do I call it a turnaround stock? Because the stock doesn't really have much of a now just calling it a turnaround stock doesn't mean that the stock is expected to give a turnaround, and I feel it's very important to give that disclaimer, because I can imagine a lot of people will hear the name turnaround and go out and purchase it. That's not what I mean. What I mean is that there is no well-established trend in this. There was a point of time when the stock was going up very fast, and then it also started going down very fast. So there is no set trend like the way we saw in Asian Paints or Abbott India, but this stock has been falling since a long time. Trading these kind of stocks can be very, very risky, and I don't recommend new members to start trading in the stocks. Let go, forget about setting stop losses and targets. Let's also take a look at Amber. So as you can see on the chart of Amber, it is a upward trending stock, but then at the same time, the kind of movement that it has given since May 2022 has been downward. So here we can see that it no longer has an established uptrend. It may need a turnaround from where it is right now to establish a long-term trend. So this again becomes a turnaround stock. So why I'm telling you about the different personalities that a stock may have, and of course these personalities are subject to change in the long term, but it is important to know because you will know how exactly to deal with setting stop loss and target in these various stocks. Now again, let's take an example of few momentum stocks and continue this discussion. Now, one good momentum trading stock is also ABB that I will discuss about now. So this is the 75-minute time frame of ABB, and you can see here that the stock indulges in a lot of up moves as well as down moves. For a long-term investor, it's of course a very good stock, but then if you want to make consistent positions, you have to make few observations. Now, what are the indicators that can help you make observations about where potential support and resistance lies? Well, to identify potential support levels in stocks which are good momentum stocks is moving averages. So on this chart, you can see quite a lot of moving averages. The more important ones are the 200-day moving average, the 100-day moving average, the 50-day moving average, the 20-day moving average. These four moving averages are what I personally use, and I set these moving averages across different time frames ranging from 3 minutes, 15 minutes, 75 minutes, daily, weekly and monthly. What I also like to do is get a reflection of what the monthly moving averages might be looking like on the daily time frame. So if you're thinking you're seeing a lot of different lines, but I'm only talking about 4 moving averages, trust me, there are only 4 moving averages, but you're seeing multiple lines because they are giving a reflection across multiple time frames. One more moving average that I do apply on the charts but use very rarely is the 500-day moving average. It basically is very helpful in identifying super long-term investments. Now, you can see there are 2 blue lines. One is this blue line, which is basically nothing but the 200-day moving average on the daily time frame. There is another thicker and more transparent blue line, which is the 200-day moving average on the weekly time frame. How did I happen to reflect that on the daily time frame? Very simple. I just use the 1000-day exponential moving average. Why? Because 200 into 5 is equals to 1000. Why 200 into 5? Because we're looking for the 200-day average on the weekly time frame. One weekly candle is formed by 5 daily candles. So when you just do that math, it boils down to a simple 1000 moving average on this chart. But it's very important to identify that I'm not using this as a 1000-day moving average on the daily time frame, but 200-day moving average on the weekly time frame. That is a very important distinction because the mindset completely changes. So basically, long story short, moving averages are a great way to identify when your stock has caught up strong momentum, and it also gives you an indication of where a good entry point might be. Now, for instance, take a look at the stock of ABB. We can see that a good, strong, long-term upside trend was established sometime in November 2020. And how can we be sure of that? Because here on the chart itself, we can see that the stock had moved up above the cluster of all these moving averages on the daily time frame, and it gave a breakout above the 200 EMA on the weekly time frame. Now, once it was above the 200 EMA, we know that the stock has established itself in an uptrend. So what you can do is you can wait for the stock to basically come back down to take support on the daily or the 75-minute time frame near the cluster of these supports. Now, the thing is that the rule is not consistent for all stocks. So you need to go back and take a look at what the stock's tendency is when it comes to taking support. Now, for the chart of ABB, say today is the November of 2020 and I don't know what the stock is going to do. What I'm going to do is I'm going to go back and take a look at how the stock behaves when it starts trending. So if I go back, I can see that there was a strong trend back in 2003, and once that trend was established, the stock had a tendency to retrace back all the way to the 200 EMA on the daily time frame and then start moving up again. I will also want to go take a look at the 75-minute time frame and see what it looks like on the 75-minute time frame. Again, when we are going one step down on the time frame, data as back as 2003 might not be available. So we'll have to look for a similar kind of setup on a time frame which is on a period which is available on the lower time frame and make a study on that. So for instance, here you can see the 200 EMA of the 75-minute time frame and the 200 EMA of the daily time frame, which is nothing but 1000 EMA on the 75 time frame because of the same math, 200 into 5. So here again we can see that on the 75-minute time frame, on the basically the shorter waves, we see a similar behavior on ABB. That is, the stock comes down all the way to retest the cluster of moving averages once they have constricted after some up move, and that becomes a good potential entry point. So then you can enter. Now the question is, how do you set your target, right? So now that we've established or given a brief discussion about how to enter, using moving averages. Now, of course, important to mention that moving average is not the only thing that we should take into consideration when making a position. I always say that moving average is a lagging indicator and it is not enough to make the primary decision. You have to take a look at other indicators of your comfort which should be leading in nature. They can be momentum indicators, can be breadth indicators, can be volume indicators. You have to make sure that you have at least 2, 3, even 4 if you can manage confirmations before you make a position in any kind of stock, and then go about setting your target and stop loss. Now, the best tool for making target and stop loss, I believe, firstly is the trend lines. So my method of drawing trend lines is by cloning. So in order to clone trend lines, you need to draw the first trend line. We all know that trend lines are drawn by joining 2 major peaks or 2 major bottoms. Now, whether you're going to choose a peak or a bottom depends on the historical chart of the particular stock on a larger time frame. For this purpose, I'm going to use either the weekly time frame or the monthly time frame, and I'm going to look for well established points. Now on this chart of ABB, you can see that there is one established high point but not a second one. So what are you going to join it with, right? On the other hand, I can see there are 3 very well established low points. So basically this became my first trend line. I joined these trend lines, I joined these points with a trend line in a way that I was getting maximum engagement on the line, and then I went ahead to clone this trend line to meet other key points. Now, when I cloned this trend line to meet this high point, it gave me a target of basically 4627 on the stocks. Now 4627 is very exact, obviously, but you can get an idea that around 4600 is where a potential target would lie. Now all you have to do is go back on the lower time frame and look for potential entry and exit on the stock. Now coming back to the most recent time horizon, you can see again, I mean, if you can see again, let me just remove the Bollinger Bands because it's not part of our discussion and it really messes up the visibility of things on charts. Okay, I'm also going to remove these lines, try to make this chart as clean as possible. So there you go. You can again see that the stock recently also dipped down to take support at the cluster of trend lines and then move up. So what would basically have been the first target? The first target was the nearest trend line resistance, that is 3546. You can see 3546 has been achieved on the stock. Now what should I do? Should I enter the stock or should I wait? In my opinion, I'm going to wait for another support to come, because here I can see on the chart or the historical price action that the stock has a tendency to take resistance at every trend line but then come back to retest the supports. That being said, you also need to keep in mind the broad market outlook. Now, we know that the broad market has been rallying consistently in a one-sided manner since a long time now. Nifty is very close to reaching a 19,000 or where is Nifty? I think 18,300 roughly. So yeah, Nifty is close to 18,300, and of course there is a possibility it will go to 9,000, but there is another possibility that a possible correction might be witnessed in the stock. So it's very important to make sure that you're entering a stock right before the rally, not after the rally. If you look at the 75-minute time frame here, you can already see that firstly the stock has breached above the trend line, which is great, but secondly, now is not a good time to do a potential re-entry because of multiple factors. Let's talk about them. On the 75-minute time frame, we can see firstly that the momentum has started to lose, the momentum is starting to decrease. How do we know that? Firstly, on the 15-minute time frame, there is a negative divergence on the RSI right here. This is the first indication that the momentum is being lost. Secondly, let's take a look at the volumes. Now the volume was fantastic when the stock broke out above the trend line. However, once it broke out above the trend line, the volume has started to decline. Now we should be wondering, is this common behavior for the stock or what? So let's take a look at the last time the stock gave a breakout above the trend line. And we can see here also that when it broke out above the trend line, when it was very close to the trend line and about to break out, it gave very strong volumes, but then the volumes dried up. We saw that the volumes again picked up when the stock went up again from the trend line, but then the volume started to decline again until the stock went back into rally. So we know that the momentum has been lost, but then we don't know what the stock is going to do. So it's best to wait. Another reason that indicates it's best to wait is the RSI. The RSI is clearly in a very overbought zone. That is, it is trading above the level of 70. There are two implications to this. Firstly, RSI being so high up above the 70 means that the long-term trend is fantastic and very strong. But that is not enough for us because this is the stock market and we always have to protect our downside. So what we're going to do is we're going to wait for the stock to cool down a little bit. We can see that it is clearly above all the moving averages that we are tracking on the stock. Not a very attractive entry point. So we'll wait for the stock to come back down either below at least 50 EMA or 100 EMA, ideally touch the 200 EMA, and that is where we are going to try to make our entry. Now the next question is, how do we make our stop losses? So once you've identified a good entry point, you need to look for the next best support. Now, in order to look for the next best support, there are a few things that you can do. Look for the previous high or the previous low. Look for points where there was some price activity. Now on the charts, you can see that I draw these green color bars or green color zones. These zones are basically, the idea behind drawing these zones is to identify identify price levels where there's been a lot of activity, either breaching or bounce ups. Multiple support and resistances are appreciated, and depending on which time frame you're deciding to trade, you should make sure that these zones comply with at least one time frame above and below the time frame of your choice to trade. So drawing these lines help you out in making decisions. Another important thing that you need to take care of is Fibonacci retracement. Now, like I said, different stocks have different personality. They behave differently with respect to RSI. They behave differently with respect to moving averages. They also behave differently with respect to how much of their waves they tend to retrace. Obviously, this number is not the same every time, but when you do a past price action analysis, you tend to get a good idea of how a stock tends to behave. In the stock of Abbott India, we just discussed about 30 and 15. Basically, it's a rough estimate that the stock has a tendency to move up around 30-40% from its base and break down around 10 to 15% from its tops. That is why swing trading in that stock is so attractive. There are lots of different stocks in the market which give different ranges of movement. Once you've identified these ranges, it becomes very good to work with these stocks. It becomes easier, because see, there are different cycles which are in motion in any stock at any given point of time. Now, we are studying the 75-minute time frame and making decisions based upon that. But again, you have to be very careful about what's unfolding on the daily time frame. If the daily time frame is showing you that the stock is overheated, it might be possible that the correction that then happens on the 75-minute time frame will be bigger. Might not be 15%, might be 30%. But you have to trade in such a way that your probability of success is maximized. So for Fibonacci, like I was saying, what you have to do is you have to draw the Fibonacci, or rather what I prefer to do is I prefer to draw the Fibonacci levels across multiple waves on the stock and see what is the level where the stock has repeatedly taken correction or taken support. A lot of times I see that the stocks tend to repeat these levels. It can be anything from 61% to 50% to 38%. The most common mistake that new traders in the market do is they look for one size fits all, or rather one retracement level on the Fibonacci scale which fits all stock. That is not the right approach. You have to look for the level which suits every single stock. Just like every different person has a different size that fits them, same goes with the stocks. Stocks have different personalities, different ways of moving, different moods. So you have to identify what is the mood of each stocks. This is also the reason why every trader cannot trade every stocks, because for instance, not all of us is very good at dealing with every kind of temperament. Same way, you will not be very good at dealing with stocks of different temperaments. You have to find out what are the stocks, or rather what are the temperaments that you are good at handling, and then play to your strengths. Identifying such things takes many years in the market. I have been tracking stocks, their behaviors, tools, using these tools for the past 10 years, and now I feel like I've started to have a vague idea about what these might be. I mean, if you're smarter than me, then maybe you can crack the code sooner, but then this is the crux of it. You basically have to get familiar with the way stocks move. The best way of doing that is by knowing more and more about its historical price action. On that note, I would also like to invite the attendees to join my Telegram channel, where I help, through which I basically help out members by giving them stop loss target levels in my channel for free. So if you have active positions based on swing trading, okay, again, disclaimer that I am not an expert in FNO or intraday trading, and I will not be able to help you out. So if you're a swing trader like me and you would like help with your active positions, you can connect with me via my Telegram channel. So feel free to click the link and join it. All right, so we've covered moving averages, we've covered slightly about RSI, we've covered about Fibonacci, we've covered different personalities of stocks. Next thing that I want to talk about, talk to you about is the levels. See, or rather the phases. You must already know that stocks move in waves. Now, these waves have different stages. For instance, let's take a look at this same chart of ABB and identify its waves, or rather the levels. Now, I identify stocks in 5 different levels, and as a long only trader, this is how I identify the levels. So the first level is when the stock is bottoming out and has started giving subtle signs of bottoming out. These subtle signs will usually materialize as positive divergence on the 75, 15 or daily or even weekly time frame. Once you've seen these divergences, we require confirmation to make a move. So level 1 is when you start, sorry for my bad handwriting. Level 1 is when you've identified that there might be a potential reversal in a stock which has fallen or taken a correction. Level 2 is the confirmation. Once you're sure that the stock is ready to, has given a confirmation that it's going to go up, we say that the stock has reached level 2. Level 2 is when we start making active positions and placing our buying bids in the stock, identify a target and set our stop loss. Now we are ready to ride the wave. The next level is level 3. So basically, this is where level 2 would have happened. This is where level 1 would have happened. You might have guessed that these levels are not marked individually, rather they are slightly overlapping in nature. The next is level 3. Level 3 is where the rally occurs. So basically then this becomes rally. This is the hot part of the of basically the wave, and this is where the most of the money is made. Level 3 is also great for adding more to your positions. Next comes level 4. Okay, another thing, if you go and Google these things, you will not find it, because this is how I define things in my own research. This is how I like to identify stocks. So firstly, I identify stocks by personalities. Secondly, by what level they are in. And of course, these things keep changing. So that is why my work is never ending in the stock market. So if you thought trading was easy, trust me, it is not. Lots of homework involved. Level 4 is when the stock is basically taking a rest after giving a strong rally. This is again a good position to add more to your position. This is a good point to add more to your position to make most of what might be coming next. The last is level 5. Level 5 is when we need to start planning our exit from the stock. This is basically where the stock starts showing, either it starts taking resistance at a nearby trend line, or it starts giving sideways moves, or the stock start giving negative divergences. So level 5 is basically when we say we are done with our position, we've ridden the wave, it's time to now get out of this position. So these levels basically that I identify on the stocks, they sound really easy, but in practice they're really, really hard, because when we are identifying these levels, I tend to work with the daily and the 75-minute time frame, but because I also use the 3-minute and the 15-minute time frame, I often end up exiting my positions a lot sooner than I would like to. So the downside, not of these levels, but my personal trading, is that I have so far mastered level 1, level 2, level 3. I am still very weak in level 4 and level 5. So if you're a trader, or if you want to become a full-time trader, if you're just starting out, then these are basically the broad level of things that you need to keep in mind, that you need to practice and learn. So someone asked me at the very beginning of this session, how long does it take to become a successful trader? My friend, it is a work in progress. How you define success, basically you might be defining success as, making consistent money in the market. You're saying beat mutual funds. Sure, again, let's take the broad market index. Say if you're consistently beating the broad market index, you're a successful trader. But then again, that degree of success can constantly vary. So being a full-time trader is a very intense job. It requires you to put in a lot of hours for research, for doing the actual trade and reconciling your trades, studying your trades, extracting value from them. There's a lot of work to be done, and in my opinion it takes at least one full market cycle, which lasts around 7 to 8 years. But in order to truly establish yourself, you will have to survive and succeed, thrive over at least 2 market cycles, which can be as long as 14 years. All right, so now move on to the comments, and if you liked what I have discussed or have any questions related to that, please drop it in the comments. Also, if you appreciate or if anything I discussed made sense, don't forget to give a thumbs up to this live stream. All right, let's take a look at the comments. So we have an inquiry on the stock called FSCT, FACT, fertilizers and chemicals. Okay, let's see. Not a stock that I follow, so not many promises. Okay, but looks like I did do a study on this stock recently for another member. Okay, I would first like to take a look at the monthly time frame. So unfortunately, the stock of FACT is showing some big negative divergences on the monthly, the weekly, the daily time frames and the 75-minute time frame. So personally, I would say it's a no-go, and if you have long positions, I would advise you to book your profits and get out of it. Another stock is Bajaj Finance. I studied the chart of Bajaj Finance recently. I'm going to do it again for you. So Bajaj Finance has established itself in a very good uptrend, gave a strong breakout and started to move up again. But based on the things that I discussed with you about stocks, personality, movement, good entry points, now is not a good entry point for this stock. So if you have an active position, surely keep holding on to that. Maintain a stop loss at 6,520 on this, on Bajaj Finance. But if you want to make a fresh entry, I would suggest avoid doing that. For those who are long, if the stock continues to go up, great, ride the wave. If it breaches the level of 6520, exit, and a potential re-entry might present itself around 6200, and that's what I would say. Now let's move on to another session. Mr. Coconut Gupta, my name is Kavita Agrawal. I have shared the link to my Telegram channel, so if you'd like to connect with me, that is the best way to connect with me. Just click the link, you will be redirected. Mitranduji is saying informative session regarding Union Bank downtrend. What would be good level for trend reversal, fresh entry? I was looking at the chart of Union Bank just today morning, and see, while in rest of the banks I am recommending people not to make positions, my opinion on Union Bank is slightly different. I believe Union Bank has established itself in a wonderful long-term upside trend. So if you have a long-term position in Union Bank, you should definitely continue to hold that position. However, if you want to make a short-term swing trade, then wait for the stock to stabilize a little bit more. Now here on the daily time frame, the stock just took support on the 200-day moving average, and that is a very good support level indeed. So as long as the stock remains above the 200-day moving average, that is the next 7 to 8% downside, you can continue to accumulate a position in that. But then that being said, you should make sure that you're using a stop loss near the level of 63 roughly for an upside of 106 on the stock. 106 is basically a 50% upside. So looking at the level, your time frame on the stock should be not less than 3 months. Kanak Raji is asking about which is a stronger support, the 50, 200, 20 or 100 moving average. See, Kanakrajji, you have to take a look at different stocks and see which moving average do they bond with more easily, and identify that. There is no one answer. That being said, of course, 200-day moving average is the more stronger moving average. A lot of times I have seen different stocks have different tendency or different behavior around moving average. See how some people with their parents tend to be very friendly. Some people tend to, have a love hate relationship. Some people tend to have a very formal relationship. Some people tend to have very friendly relationship. Same way goes with moving averages. Okay, so you can say that 20 moving average is like the younger brother, 50 moving average is like the elder sister, 100-day moving average is like the mother, 200-day moving average is like the father. So sometimes I've seen stocks just touch the moving average in reverse. Sometimes stock have a tendency of piercing the moving average a little bit and then going up. So when you're setting stop loss target, you have to take a look at all of these factors. You can't just blindly go about using any random moving average for stop loss target. I mean, if things were so easy, we would have a lot more successful people in the stock market, right? Your second question is smaller time frame EMA like 20 crossing over larger time frame. So EMA crossovers are used by some people for trading. In my opinion, they are very, very lagging indicators. So by the time these moving average crossovers happen, there's already a lot of activity which has happened, which you've missed out. Secondly, moving average crossover is a very bad indicator to use when the market becomes sideways, which is quite often you will end up with a lot of strings of losses. So using moving average as the primary and the only trading system is a very bad idea. I would recommend you to strongly use multiple, especially few of the leading indicators. If you don't know which is the perfect indicator for you, don't worry. Just start with something, use it for some time period, see whether it appeals to you. If it doesn't, move on to the next one until you find the one that actually makes a lot of sense to you, and then keep studying it over and over and over. Okay. So we have Kalpana. She has a position in Coforge and she's asking whether she should book profits or loss. Okay, her position is in loss right now. Okay, so see, Coforge, I think you should book your profit because it's taking resistance firstly at the trend line. Secondly, it's giving a bit of a negative divergence on the 75-minute and 15-minute time frame. So if Coforge goes above the level of 4200 with strong volumes, then I might be more interested in making position. But for now, I am of the view that Coforge will try to retest the level of 3885 soon. All right, so Sam, I have discussed Asian Paints. I hope that was useful to you. Mahesh, she's asking about Divis Laboratories. So Divis is showing very strong uptrend. However, for a fresh entry, I would not recommend you to do that because the stock is above all moving averages, and if it pulls back down, the stop loss is going to be brutal. However, if you still want to make a long position, I would suggest you use the 500 EMA or rather the level of 3560 as a target, and you maintain a strict stop loss at the level of 3342. Okay, let's look at some more comments. So I'm going to ignore the options queries. We have Mr. Krishna and he's asking about options again. I'm going to ignore that. So we have Abhay and he's saying he's holding Zomato and his position is in loss. What should he do? Let's see. All right. So Zomato strong recent rally and some more steams left. So I would suggest that you so Abhay, I would suggest you hold Zomato for a target of 71 because I believe it can retest that level. That's a good 15% upside. After that, I'll have to reassess what to do. I would also suggest you to use a stop loss. Yes, I would suggest you to use a stop loss at the level of 59 on the stock. You're also asking about Wipro. So I am personally very bullish on Wipro. I think it's heading for a massive rally. It's very good stock for adding to your portfolio with a long-term perspective. It's giving a beautiful rounding bottom, and the short-term target on Wipro is around 406, whereas the long-term target for me on Wipro is above the level of 700. Now, if you're going to maintain a short-term target on Wipro, I would suggest you use the stop loss at the level of 379. There's a reminder from the ET moderator. I also do paid one-on-one sessions for members who are serious about swing trading. You can avail those one-on-one sessions by clicking the link shared by the ET moderator in the comment. All right. All right, so looks like we are pretty much done with the comments. There is one comment by Trilesh. He's asking about emphasis. Now, for those who might be attending for the first time, I discussed emphasis on one of my Let's Get Technical series, where I basically called out emphasis as a very good investment for the long term. Back then, it was clear, it was showing a sort of a turning a rounding bottom, and I had set multiple targets on it. Unfortunately, emphasis only managed to attend as high as achieve as high as the second target. It didn't give the kind of bottom that I was hoping for, and the position had been negated. Now the query is whether emphasis is set for giving a similar kind of rally anytime soon. Now the answer is that considering emphasis breached the 200 EMA on the daily and the weekly time frame. Unfortunately, my view is not very bullish on the stock. Right now, emphasis is also taking resistance from the 200 EMA around the level of 1920, which becomes a short-term target. So if you are holding the stock, then I would suggest that you book your profit around that level of 1915, because that is where I'm seeing a lot of resistance coming in. However, for a more long-term position, I would want the stock to go above the level of 200 EMA on the daily time frame and sustain with high volumes. Until then, until that happens, I will not suggest making any position in emphasis for the long term. All right, so some more comments have rolled in, so let's discuss about that. We have NMDC. After NMDC, let's turn our attention to the chart of Nifty and Bank Nifty. Stop loss at the level of around 85.50. You stop loss at the level of around 85.50. You can make a long-term you can make a short-term swing trading position. We can see on the daily time frame that there is a very strong uptrend in place already. It looks like my connection has been interrupted. I'll just wait for it to come back. Okay, we are live again. All right, so Marksons is in super strong uptrend. Let me just It's been a while since I studied this stock, so I'm going to draw some trend lines first and then clone the trend lines. Now remember, when I'm cloning the trend lines, I am only looking at the historical prices. I am not paying attention to the recent time frame or the recent price action. I'm only looking for important price points which are visible here, and based on that, once I've covered all the important peaks and troughs on the weekly time frame, I will keep moving down until I feel like I have covered most of the time frames. All right, so here you can see that the Marks and Pharma stock is in strong uptrend, and at the same time it has, oops, sorry about that, clone that. Okay, again, strong uptrend. It's also close to a resistance from the trend line. However, the momentum is still very strong. So here, if I wanted to take a position, my target wouldn't be very big. It would be around 83, which is only 6.5%. But luckily, my stop loss would also be pretty small, which is 75.5. Personally, I wouldn't go forward and take a position because the risk reward ratio is only 2, and because the market is so risky and we have to accommodate for a lot of risks when trading, I demand for more reward when I take risk on my capital, which is minimum of 3. So if I were in your shoes, I wouldn't be acting on this, but I'll still tell you the stop loss and the target, because to each their own. So the target from the current market price would be around 6.5% with a stop loss of around 3% on the stock. All right, let's take a look at Nifty and see what is the chart telling us. All right. So the last few weeks I have been reiterating that 18,200 was a very important resistance. Now, on Monday itself, Nifty gave a decisive breakout above the level of 18,000. So the next question is obviously, where is the next resistance? Based on this trend line, which I have drawn by joining the two previous peaks, the next important resistance for Nifty is at the level of 19,050. Which means if we take a look and why that level is important, the answer to that lies in the previous peak. If you see here, there was something called as a negative divergence on the RSI at the 75-minute time frame. However, Nifty went out and gave what you can call basically the last song or the last rally before entering into a massive correction. So since 18,200 has been braved, I believe the next resistance for the Nifty will be 19,500, despite of the fact that there is a negative divergence forming. The formation of this negative divergence on the 75-minute chart is basically an indication that a peak is nearby. So naturally what we need to do is look for the next best possible level which would justify the formation of a peak after a strong rally, and 19,050 is that level precisely. Now let's move to the 3-minute time frame. The 3-minute time frame indicates that this week there's been strong rally, and the rally is not showing any significant signs of weakness. There is negative divergence on the 15-minute time frame, but time and again we've seen in this entire rally that 15-minute negative divergences have been nothing but small hiccups leading to maybe 1% or 2% of correction, which basically means that the 18,200 level, which was braved, has now become the next possible support. That is where we should expect some, if the index were to fall, that is where I would expect support to come in. So look out for the range of 18,000 to 200 to 18,100 as the next probable support on the for the index. We've already discussed about the 75-minute time frame. Let's talk about the daily time frame. The daily time frame is also indicating that a strong uptrend is underway and is expected to continue. On the daily time frame also 19,050 remains our important target. The weekly time frame, however, is showing a big negative divergences, which is very, very bad news. Why is this bad news? Is because we can expect a big correction to come. When will that correction start? We don't know. But because of the presence of a big negative divergence on the weekly time frame, all we know is that the next correction will be on a primary wave level and will be painful. So that is also the reason why I keep insisting with members that they should have stop losses even on their long-term portfolio. Now, if you are looking for help on your long-term portfolio, basically in setting up stop losses, you can reach out to me. I'm a research analyst registered with SEBI, or you can simply visit my website. I'm sharing the link with you in the chat, and raise a request for analysis of your long-term portfolio. I will help you out with recommendations like add, hold or exit based on the best analysis, which will be done on the basis of everything that I have just discussed with you. With that, let's move on to the chart of Bank Nifty and identify our important levels before wrapping this session. As always, we'll start with the 3-minute time frame. On the 3-minute time frame, we see that this week our support level of 42,900 has played out almost exactly. When Bank Nifty started correcting from the level of 43,000, it came down to take support exactly at 42,900. But what is next? I'll be honest, on the chart of Bank Nifty, a lot of upside momentum is not seeming very evident like it is on the chart of Nifty. On Bank Nifty, I believe that the short-term resistance of 43,400 has been achieved and the stock might be going into correction again. Let's take a look at the 15-minute time frame, and on the 15-minute time frame again I see 14,400 acting as an important resistance. One positive news is the volume. The volume is looking very promising on the 15-minute time frame, which indicates that there might be a positive breakout. The resistance basically also lies at the level of 43,700, which should be the next level to look out for if the level of 43,400 is breached. The 75-minute time frame is showing a negative divergence, is not very good news. If the level of 42,900 is breached on the chart of Bank Nifty, then we should expect support to come in at the level of 41,800 approximately. My broad target on the index, on the Bank Nifty index, is not very attractive. It is the level of 37,000, which actually is more on the weekly time frame. So you don't really need to pay attention to that right now. The daily time frame again is not looking very positive. I have been warning against making fresh positions in banks for some time. Of course, there are exceptions, but it applies to most of the banks that avoid making positions because banks are giving signs of topping out. We also saw this week a lot of big falls in banks like HDFC and Federal, and that trend is expected to continue, so beware of that. Now, this was a pretty long session and honestly I am exhausted, but I hope I was able to add some value to your trading and your market outlook. Thank you so much for giving me your time and attending today's session. I will see you again next Wednesday, as I will not be able to come live on Friday and Monday due to personal commitments. I will see you again next Wednesday at 2:30 p.m. with the next Let's Get Technical series. Have a great week ahead, and until then, namaste.